Is it this?
Okay. Welcome to the fourth episode of the Gateway Open Office Hours. I'm Carter Laren. You can tweet and Facebook. Sound okay, Alicia? You looking good? Okay. You can tweet or Facebook questions at us. I might check them during the show, but I'm not totally sure. You can also hit the follow button at the top of the live stream on Facebook to get notifications that we are doing this next time. You should vote for the South by Southwest panel about cannabis that we're doing. I think it should be at the URL should be at the bottom of the screen right now. What else am I supposed to remind you of? Oh, the Elevate conference is coming up. Go to elevateconference.com if you want to go check out startups and cannabis stuff happening in Oakland. And lastly, the admissions deadline for our second cohort is coming up soon, so if you're interested at all in that, make sure you get on it. So, as you probably noticed, Ben is out again this week. I think the lighting is slightly better, but may actually be still bad, so Ben can whip me when he returns. He will return next week, so yay, Ben. Also, it's like overcast and weird, and they're resurfacing the street outside, so it's a great spot to podcast today. So, Ben's out. With me, I have GIllat. Zeev, I've known Zeev for a while. I guess you mentor at 500 Startups and Founder Institute, and I met you through Founder Institute. Yeah. Zeev started at Apple before Steve Jobs was there. Well, when Steve Jobs, during the lull, basically, right? Yeah.
He was gone and he freaking
And you've then since you've been involved in like 7 startups, I think, and founded a couple. You're on your third now. Yeah. And congratulations, because your first one I think just had an exit.
Yeah, totally.
So,
Thank you.
I5, pretty awesome. Well, hey, 10 years.
Yeah.
10 years and an exit is a success.
Absolutely.
So, yeah, congratulations on that. So, and your stealth about the most recent one.
Third one is stealth. I'm still doing fork, and yeah, we're having fun.
Okay, cool. Well, welcome. Thank you very much for being
here.
We're pretty casual, so
cool.
I know it looks like it's fancy, but it's
really
not really actually that
Thanks.
fancy. Yeah, we'll see how the sound works. Our sound is never great, but we're getting better, I think. Cool. So we're going to focus a little bit more on general startup questions because you're here, and we're going to skip some of the more cannabis-specific ones. So one of the ones, and I talked to you about this a little bit earlier, is we've been getting a lot of questions about how to balance, like work-life balance as a founder of a high-growth startup. And do you have any thoughts on that? Like, what would your advice to a founder be about that?
Sure. So, so a little background. I'm 44, so I think that people that usually are younger may have different answers, and I may have given you a different answer when I was 20. But my philosophy is family comes first. I love working. I love doing the entrepreneurial stuff. It's totally amazing. And when things are completely amazing, you want to just do it nonstop. And I do it nonstop. But I don't ever miss dinners. I don't miss trips. I don't miss kid events. So I personally really prefer to just not give that stuff up, because those are years you can't get back. So basically, my day is like I wake up in the morning, go to work, come back. I definitely have dinner with the kids. I spend time with my wife after they're asleep. So at 10 till 2, I still have 4 more hours.
All right.
Right. So just don't watch TV. Don't go to movies. Just don't waste time in the evening. But definitely, I am a huge fan of spending time with the family. And then weekends, I try to always be with them. And then again, weekends are okay. During the day. Evenings and afternoons are back to the startup stuff. So
okay.
I definitely do not want to miss my kids' life.
So I mean, maybe I'm in a similar boat in that I'm no longer 25 working on a startup. So I get that. I think the thing that you said that I think maybe is true also for 20-year-olds and 50-year-olds starting companies is you don't have hobbies generally. Like, you have to love working. Mm-hmm. And there's other things that may be a higher priority. So things like family, health. I tend to be bad at paying attention to my health, but totally. Those are important. But I don't know. I had people ask me, like, what hobbies do you have? What are you talking about?
So I love biking. So I shoot fashion models. I shoot weddings.
Okay.
So I love shooting and I love photography, and I love biking.
Here, move the mic. I'm being told.
No problem.
I was gonna pretend that we aren't ghetto, but I'm just gonna say move the mic closer to your mouth. Also, Alicia, I think you can actually turn up the sound independently on the soundboard if you want to. But but I actually don't know which mic he is, so you might be turning me up. So we should probably label that. Anyway, let's get back to the actual content of the show.
Okay. And then, stop me. So I wish I had more time for biking, so I try and bike a few times a week. So I definitely love biking, love to hike with the family. I think that you can get a lot of stuff done, even if you do those things as well. So hobbies are cool. I think that if you just work, you're going to burn out easily.
Okay.
So, iFi was 10 years in the making, actually 11 years almost. Before that, I did 2 other startups. You just get burnt out. So definitely, I would say that I worked, 24/7 when I was 20 years old, even at Apple. Totally awesome. But then I was single. I wasn't even married.
Right.
I think that, when you get married, and I think also investors love to have entrepreneurs that are super young because they know that they'll just work.
They have nothing else to do. But
yeah. But I'm not sure that actually that's actually, being smart about work. So I think that the balance is not going to be there if you're an entrepreneur, but you'll still get time to do your own stuff.
Okay. I think that makes sense. I mean, do you think... So you heard this recent thing, like Marissa Meyer, I think, recently made some comment about, we can go in on a Saturday and I can predict which startups will succeed based on who's working on a Saturday, which I think, A, is just arrogant on her part to, that's ridiculous. But there seems to be this worship of hard work in Silicon Valley, and I hear people actually brag about, I work 120 hours a week, which I'm like, wow, that's... And you have kids, that's...
So your kids will never see you.
Wow, Uncle Dad.
Exactly.
But I don't know. There does seem to be this worship of hard work. At the same time, I also see people who sometimes get into, maybe their first company, they're founding, and they think, oh, this is a way for me to not work as hard and control my hours a lot more. And I feel like neither one of those things is true.
Right. So you have goals, right? And you set your goals daily and weekly. And if you meet those goals, awesome. If you don't meet those goals, okay, so stuff carries over and stuff always piles up, and you never have enough time in the day. I am behind. I have 45,000 unread emails. I'm behind nonstop.
I think you've got me beat on that one.
No,
that's pretty good.
It's insane. So I'm always behind. It doesn't mean that if I miss my family stuff, I'll be better at doing those. I'm behind, period. I try to have the balance because I think that if I don't have the balance, I'll just go nuts.
Yeah.
And I'm not even sure that I'll be actually as successful or as productive, during the day.
Yeah, I likewise notice that when I'm taking care of my health and spending time with my kid, I actually am in a better mood. Yeah. I'm thinking more clearly. Yeah. I'm focusing on the right things at work rather than just kind of feeling overwhelmed and burnt out.
Yeah.
So
yeah, absolutely.
Cool. All right.
Yeah.
Awesome. So let's move on to the next question that we got. So this one is really, this question actually arose from some conversations I had with a founder earlier in this week. And they were asking about how to tell if a potential investor is wasting your time. Because they're like lots of meetings and lots of this and lots of that, but never any commitment. And they're spending time, right? But nothing's happening. And it's been quite some time. Yeah. Do you have any advice for that?
Okay, sure. So let me take it from both sides. I'll take it from the side of the investor and from the side of the entrepreneur. I understand that from the side of the entrepreneur, they're frustrated. They want to close this person and get the funding, funded. To me, it means that they haven't given the investor what they actually need in order to close it. So if they keep stringing them along, they are probably not doing it intentionally to just be rude. They're doing it because they probably don't see what they actually need, either on the finance or on the growth path or on the marketing plan or on the business plan. Something is not there, and they just need more info. So they probably are doing more and more meetings in order to try and figure out, okay, is there something there that we're not getting right now at meeting 1, 2, 3, 4, 5?
But they're not telling the entrepreneur this? Is that they're not saying, I'm waiting for X thing?
They probably are either too nice or they actually don't even know how to ask the right questions. I think many angels are supposed to be credited and supposed to be, knowing about the whole industry. A lot of times they don't. They may have cash or they may be in high tech, but they actually may not know how to actually be an angel. So angels come in for the passion, right? They don't come in for the same reason that the VCs come in as bankers. For the angel, they're believing in your story, they believe in your dream. If they haven't given you the money yet, it means that they actually have not seen through everything they actually need. And then I'll say one more thing about that. I am not a fan of taking money from friends and family. I think that friends and family, their money is not as green as professional investors, so they will be easier to fund you, right? So they will actually believe in you, and then even if you don't have the marketing plan or the business plan or the growth track or the how to actually monetize, great. They may actually give you the money because they love you.
Right.
Doesn't mean that you should take their
You're
money.
my schnookums. Here's some money. Yeah.
Don't take their money because. Or if they're super, super wealthy and it really means nothing to them to give you 50K, 100K, and it will not at all, like 0% chance that it will hurt them in the future if you actually fail, sounds good. Take their money. For the most part, parents and uncles, they're not that at a stage where they can give you the money and not have any impact on their life. And even if they claim they don't have the impact, they will give you a guilt trip if you don't succeed or if you don't actually, measure.
Thanksgiving will be difficult after this.
Yeah. So go with people that you don't know or people that have come through your network, and then have them ask the right questions. I believe that people that don't close funding, it's because of what they are actually doing, not the investor. The investor wants to actually fund because they have this pool of money they want to give away.
Right.
But they want to actually make a smart decision, and if they're not seeing it, they will not give the funding.
Okay.
So I think it's on the entrepreneur.
That makes sense. It's related to, I actually wrote an article this week about pitching your startup as if it's a charity, and kind of like about how much you need the money or whatever. And I feel like this is related in some way because, my advice was, if they're going to give you money out of philanthropy, you actually don't want that money either. It's not validating your business model for you at all.
Yeah.
It's kind of enabling you to have bad behavior, basically.
Yeah.
Or behavior that won't meet the demands of the free market.
Yeah, no, I mean, we raised, so for iFi, we raised from 12 angels $1 million the first year. Then we raised $50 million from VCs over the years. I also think the angels get washed out. I think it's not fair for angels. Overall, angels do get screwed in the long run. So it really does make sense to take it longer. I think that scene also is changing.
Yeah.
I think that term sheets are becoming more friendly towards the angel.
Sure. Well, that's why caps are more common now on notes and stuff. And
but still, the angels, unless they pay to play, they get washed out.
Yep.
And a lot of times they really, really need to see a lot more. And I really do think that most entrepreneurs don't know how to pitch and don't know how to actually build a case, because if the case really was strong, they would fund you. I mean, we closed angels on one or two meetings. Angels that we didn't close were because it was our fault. It was not either in the realm of interest or we didn't do a good job.
Okay,
so
that's good advice.
Yeah.
I think you touched on something earlier that was like, I don't know if this is exactly what you meant, but it seems like there's angels out there have been founders in the past, so they understand the funding cycle, and they understand things from your perspective. But then there's angels who've just like never done a startup at all, and they have no idea. They might not even know that they're hurting you by not giving you truthful answers or stringing you along or whatever. I tend to try and be really straightforward early on. Like, I'm not going to fund you.
Yeah.
Like,
and
the
that's
end.
totally awesome.
Right.
Yeah.
I'm happy to introduce you to someone if you want. If I like them, if I don't think it's a good idea, I won't do that either. Hi, Amtrak.
Yeah.
But so, do you find there's a difference between those two kinds of angels?
Yeah,
or?
absolutely. So I've met your standard Facebook, Google, Apple, Microsoft, 5-year, 10-year employee that has now become an angel, quote unquote. And I've met the, guys from New York that are just, financiers. And this is why there's this whole notion of being accredited and actually knowing what you're doing, and having a net worth of at least $1 million, so that for you, 50K is not going to break the bank.
Right.
Many of the entrepreneurs that are here, that are raising from Bay Area high-tech people, even though these guys are engineers and they've made money at Facebook, Cisco, Apple, they have no idea how to actually ask the right questions about how are you going to monetize, how will they grow their business, what's a competitive advantage. So they have
They
the
tend to be
cash.
product focused as well. Yeah.
So great if they're not friends and family. Take their money if there's a synergy. Also, don't forget that if they do string you along right now, they may do it in the future, but it's for the long term. So they're with you for 5, 7, 10 years.
Right.
Figure out if you actually like the personality besides just the money, because if they are stringing you along because that's just their nature, they may be the ones that you have to actually manage later on. I mean, out of our 12 angels, I had to manage 2 or 3. The other, 8 or so were just super quiet.
Right.
But you can tell early on which ones take more management.
Yes.
And then it's an indicator, even before they actually fund you, how they'll behave in the future.
I've made a similar, I don't know if you call that a mistake, but I've made that mistake of like, oh, actually, that 100K wasn't worth the management that I had to deal with later.
Yeah,
right?
exactly.
Yeah. Have you, so just out of curiosity, have you taken money from friends and family? Are you speaking on like, from
personal
experience of like, don't do this 'cause
Absolutely.
it was horrible?
I did for both companies, and it worked out for iFi. Hopefully, it'll work out for Fork. Actually, it's worked out and it hasn't worked out. I think, it depends where they went in, right, at what stage. I've also seen people that have got burnt, that they've gotten totally burnt.
Yeah.
So I would say, also, the money is greener if coming in from someone who's more professional. If it's your mom or an uncle, it's just worth the money itself. It's not as green as someone who's also in your space, who can bring in other BD deals. So the money is way greener. So I also think that, think of it as not just money, but how green is the money. And money from friends and family is not very green. It's just
What
money.
do you mean by how green is the money? I guess a metaphor, but...
Yeah, so how much... how valuable will it be for you in the future? So, to me, 50K from an uncle is great versus 50K from somebody who is totally in my space, who can bring me 2 more BD deals, and then in the future their 50K is actually worth much, much more. So love the uncle, but the 50K from them was just money, and it's tied to strings, versus the 50K that comes in from the person who's in your space will bring in possibly other deals or possibly even more money.
Okay.
So it's greener.
That's all right. That's a good description. And actually, just this week we had a founder who someone wanted to fund him. I think it was $1.5 million. Like, just let me just write the whole round for you. And I had to kind of it was a little bit difficult, but I had to advise him exactly that. Like, actually, you need someone you're going to have to raise another round later. And this person is like zero help getting you that bigger money. Okay. Like, let them take a little bit of this, but you need someone who can get you, open those doors later and get you to the next stage. And it's tempting.
Totally. Of course. But if they came in right now with $500,000 and led the round, but then later on they can actually keep that million for the play to play pool.
They can follow on later.
Exactly.
Absolutely. Yeah.
If they're gonna get totally maxed out at this $1.5 million. First of all, it's not a good notion that they should give you the full 1.5 right now. Right. Secondly, they have to keep at least double, sometimes 3x for the pay-to-play pool, and 1.5 should turn into 3 to 4.5 million. So, okay, great. If they're that wealthy, maybe. But yeah, dude, I agree. It's 1.5 right now from one person seems to be really high.
Yeah. No, and that's what it seemed. And it wasn't someone who was like, "Hey, I'm connected to Kleiner and everyone else, and can get you series B, C, D, E." It was some person.
So it's a super angel. Really
yeah. Not a non-Ron Conway super angel, right?
So it's not worth it. Yeah, because basically it doesn't pass the mustard. They will give it to you because they love you, they believe in you, but you're gonna have a hard time at the next stage. So you're totally right.
Cool. Any other advice for founders generally on raising capital?
So I'm seeing a lot of AngelList. So they have these really beautiful groups, and I'm seeing AngelList really change. So now you have these groups that I'm drawing a blank on the name of it.
The syndicate.
Syndicate.
Yeah.
So I actually
Gil's got a really good one. Jason's got a really good one.
Yeah. And Gil actually made the whole notion, right? So totally awesome. So syndicates make a lot of sense. I think that if you find a syndicate that completely has people that are in your space, you get exposed to 30, 40, 50 people. In that case, taking money from your parents is okay because it goes into the main pool of the syndicate.
Right.
They can actually give you 2 to 5K, and it's fine. Usually, if it wasn't a syndicate, 50K is the minimum bar, not 2 to 5K.
Right.
So love that notion, but I still think it's basically the basic notion. If you have the right business and the right model and the right strategy, the money will come. If you don't, something is missing. So figure out what it is, because if you can't raise now, it means that you will have definitely a difficult time at the A, B, and C.
Sure. Do you think founders sometimes do you think they're right about when they need to raise? I want to answer the question, like, what do you think about founders' kind of internal compass about when it's time to raise and when it's not?
So I'm a huge fan of actually starting stuff on the side, getting the income from other sources, not relying on funding. Same with Fork. We had full-time jobs. We still have full-time jobs. Fork is still a side project. If we get traction and we believe that we actually are at a point, great, we'll quit our day jobs and go and do Fork full-time. With iFi, 10 years ago, same thing. I was at a different job. I needed money for our second birth. Stayed there until he was born, and then moved on because I actually needed the money.
Sure.
I still went into massive debt, went into a second mortgage. It was really, really painful, but again, I was younger, so it's fine. I think that it's completely, people think that they can raise way too early, so I totally agree with you. And then what happens is they're not ready, and then even if they do raise early, they quit their job, they only have 50, 100K, it lasts them for 6 months to a year, they can't grow fast enough, and then they choke up. So getting the extra income from a different source, either from a side consulting gig, something else, so that you can do this and grow it at your own pace, and then raise when you feel super comfortable, and then go full time makes more sense. So yeah, I agree with you. People just do it way too early, and then they fume out.
Yeah, that's great advice. I mean, I think I've seen also instances where people they can consult to people who would ultimately be their customers anyway. So they're kind of also learning and doing customer development while they're making money as a consultant, and building this thing on the side that they hope to transition to.
Yeah, absolutely. So they learn. Exactly.
Yeah.
So absolutely.
Cool. The last question, we only have, I know you have limited time.
No worries.
So last question, which is a little bit wonkish, but I'm going to ask this because I'm wondering if maybe I'm just crazy and maybe I have a distorted perception of Silicon Valley generally, but I've noticed this mostly in the cannabis space. There's a lot of people wanting referral fees for everything that, I'm going to send you a startup. I want a referral if you choose to invest in this and that. And in Silicon Valley, I sometimes, there's two things I see in Silicon Valley. One is if you're a venture partner bringing in an LP to a fund, you get carry usually. And two is, very rarely you get a venture partner who has awesome deal flow that the fund can't get themselves, and sometimes they'll get carry but never cash. Am I crazy, or is this normal and I'm just living in a bubble?
Yeah, no. So I completely agree. I hate people that want to get paid for introductions and for referrals. So I'm a LinkedIn whore. I will make intro for anybody if I can do it, and I'll never charge money for it. I think that if I can help you in some way, I'll do it. And one day karma will come back and you'll help me out. And if not, no worries. If I can help you out, totally awesome. I've seen people actually that completely charge for even just, LinkedIn referrals or intros to angels. I hate it. I think it's slimy. Same thing with VCs. I think it's slimy. So, intro to VCs. I completely agree with you. People should just do it because they have a network, and karma will bring them back goodness. And if not, they helped out, somebody else. Getting a referral fee is short-sighted because you're gonna do it once or twice, and then the person may just never come back. Because you've left them with just a bad taste in the mouth. So Yeah, I agree with you. You're not crazy.
Okay. I'm wondering also if it's maybe an East Coast thing. I grew up in New York, but I didn't do business in New York. Really, I had an office there for a little while, but I'm not in the New York investment and startup scene. So, are you? Maybe is it an East Coast thing? Maybe.
No. I've been asked by people here in the Bay Area. This guy was completely into carriers, and I needed to get into carriers. Verizon and Sprint I knew well from the U.S., but this guy knew carriers in Latin America. He wanted to get paid for doing intros to Latin American carriers. Now, he did know everyone on the inside, but I felt it was definitely not cool to ask for the So I'm with you.
So it's not cool, it's not me.
It's not you. If you know how to do the intro, or you know the person, just make the intro.
Okay, cool.
Yeah.
Thank you. Well, look, I appreciate your time. Just we're going to wrap it up here because we're running out of time. Just for everyone else's edification, I know there were a couple of cannabis-related questions that were tweeted to us. Canna Naturals, I think you guys, shout out to you. You asked a question about B2B deliveries in California. We do have an opinion about that. I'm going to wait till next week when Ben comes back, and we'll answer that. Also, we had a question about what tech we want to see in cannabis, so we'll answer that when Ben is back next week. But Ziv, thank you very much for joining. Thanks to everyone for watching. Remember, you can hit the follow button on the video on the top of the live stream to get notified when we do this. It's every week at 10 a.m. Pacific time. You can vote for our South by Southwest panel, which is should be on the bottom of the screen right now. Remember about elevateconference.com. Go there, check us out. You can hear, actually, Adeo is speaking there, so Adeo Ressi will be there, as well as people from the cannabis industry. And then, again, admissions for our second cohort is coming up. The deadline is coming up soon, and hopefully the street will be paved by this time next week, and we won't have all this background noise. But again, thank you very much, Steve.
Thanks for having me.
All right.
Awesome. Cool, thanks.